There, what's up, everybody? Hopefully, everybody is doing amazing. Everybody is doing great. It's on a Monday, another week that we are preparing for other days, probably Tuesday, Wednesday, and Thursday, also Friday. But it was on a Monday, and we had, or I had, lots of lessons and opportunities that I want us to sorry guys, to share these in this video. So I have my notes here. If you want to get these notes, I'll request that you go to you can pause them, but generally you can go to my TikTok, ranks exam, or you can go to my Instagram and you can check on these journals. So without any wasting, I'll get rid of them and let the markings be, which I'll be explaining. But without wasting any time, let's get started. So I want us to start from the higher time frame. And number one, what we have to have is we want to know where the market is heading to. So number one, we have to have the buyers. And what the buy what do I mean by saying buyers? We want to determine which direction is the market heading to, right? And if we determine the direction, then the next thing we have to determine is the draw on liquidity. What is attracting the market to go onto that direction that you have maybe analyzed and found? So number one, we want to identify the buyers, and from the higher time frame, that's where we identify the buyers from. So from these 4-hour time frame, what did I see? So we had these trading on Sunday. This is the Sunday trading. Also these down close candle. Then we had a Monday trading, right? This candle opened lower, then we had a rally higher. From the 4-hour time frame, we cannot see that 1 hour fair value gap that I have highlighted, but using these 4-hour fair value gap, I'll go to the 1 hour time frame and ensure that it's only visible from the 1 hour and below. So if we go to the 4-hour time frame, we'll not see the fair value gap. So from the 4-hour time frame, what I can see is we had this candle open here, then we can see it rallied higher, then dropped or rejected lower, closing inside these candles. Buy side liquidity. So it grabbed the buy side liquidity and the candle closed inside liquidity. So what does this rejection tell us? So if we go to the lower time frame, these rejections will be shown as we have fair value gaps going higher. Also we have fair value gaps going lower. So with this confirmation, or with this sign, this is number one sign that we might anticipate to see lower prices. So with this price action, I am anticipating to see lower prices, but that is not more, it's not clear enough, right? But we'll go to the lower time frame to confirm this. With this price action here, and we have anticipated we might see lower prices, but to which levels are we anticipating to see these moves? So we have already identified the direction, which is a downward move, but what should attract the markets going lower? So we have this 4-hour fair value gap here, as well as this 4-hour fair value gap labeled the high of this 4-hour fair value gap onto the left. So with this, now we can go on to the lower time frame. But since this is hindsight, and talking about that, because we had seen this rejection, so the next candle we can see we had a little bit of consolidation. So after the consolidation, that's when we can see we had these candles tanking lower. So number one thing, after identifying these or seeing these rejections, usually we want to see because the lower time frame has already confirmed that we might be heading lower, but to which level? So we have identified the 4-hour fair value gaps, which later on were tagged into. Now dropping to the 1 hour time frame, and inside the 1 hour time frame, that's where now I would like to use my kill zones. And what am I seeing here? We have these lows. I guess you can see the 4-hour fair value gaps that are labeled. So this is the first fair value gap and this is the second fair value gap. So on Sunday, what we did, we had a rally, we had this consolidation move, which was the Asia highs and lows. Then during Monday London session, we had this staying higher that cleared the Asia highs. So we have buy side liquidity that has been cleared. We have also tapped into a key level, that is the 1-hour fair value gap. Then we rejected off that, right? With this drop lower, we can see we had a little bit consolidation during the London session. Then during the New York, we had this thing staying higher back into that 1-hour fair value gap, and we will confirm these liquidity sweeps onto the lower time frame, that is the 15 minutes time frame. But inside the 1 hour, it's not that clear, but I'll go back to the 15 minutes to explain. So during New York session, we had staying higher into the fair value gap, but we failed to make a higher high, right? Because this London high was maintained. That was the high of the day. Most of the time, the high of the day the high or the low of the day usually forms during London, and with these we had a London form during London inside a key level after Asia highs has been cleared. Then during New York session, we rallied back into the 1 hour fair value gap. uh, we had a liquidity sweep and not a liquidity run, which we'll identify from the lower time frame. Then from there we can see how the market rallied lower and tapped into our targets. So dropping onto the 15 minutes, where I think we'll have much more to say. um, Over here you can see during London session, we had a sting into this 4-hour fair value gap, 1 hour fair value gap, clearing these Asia highs. Then we had this movement lower during London New York session. We had this formation of this fair value gap here. So with this price action, let me make these charts clean, because we have lots of things to talk about here. So this is the New York session, this is the London session, I mean. So during a London session, we cleared Asia highs. Then we had this drop lower. I'm not a London trader, so I let just London trade. And we had relatively equal lows being created. Then we had these retracement higher, and because we were nearby a New York session, so we had this movement lower. But what happened is we had these lows that I was watching. Do we have a sweep of liquidity, or do we have a run of liquidity? And when I'm talking about a run on liquidity, I want to see the lows being run or the lows being grabbed. And after the lows have been grabbed, I want to see a fair value gap being formed that overlaps with the lows. So what happened here? We had the lows being taken, but we didn't have an overlap of a fair value gap. So it was a liquidity run. And what happens if no, it was a liquidity sweep, because we do not have a fair value gap formation. And what happens if we have a liquidity sweep? So if we have a liquidity sweep, then we target the opposing swing point. So with this liquidity sweep, then we had the market rally higher, clear the opposing swing point, which was the swing high, was cleared at around that level before then we had a drop lower. So after we'd seen this liquidity sweep, the market rallied higher. Before taking the previous or the opposing swing point, we had this drop lower. So to those who were early and who did enter the early move, they were taken out, right? Because I think they had their stop losses above there. So this was the first fake move. Then we had the rally higher to clear the opposing swing point. Then we had this drop lower. This drop lower, that's now where we want to be involved. Also remember, at around 4 a.m. that's when we had the 4-hour. Then I'm sorry, at around 9 a.m. that's when we had the 4-hour candle open. So we had this thing into that 1 hour fair value gap. We had this rejection and remember the rejection, the candle signs. If we have a rejection like this, meaning from the lower time frames, we have that's the 1 minute, we have higher fair value gaps as well as the fair value gaps going lower. So with that formation, I don't usually go beyond the 15 minutes. Then we had this drop lower, creating a market structure shift, also a fair value gap. So this was the first point where we were to have our trade, right? Our trade was to be based on this fair value gap, with the stop loss being a conservative stop loss above the high and also targeting a 1 to 2. Then we can see the market tanked lower. As the market was tanking lower, we also created this fair value gap. Now we have a sweep of liquidity, whereby we have these lows being taken, creating this fair value gap, if you can see over here. So we have these lows being taken, creating a fair value gap. Now this is what we mean by a run on liquidity. With this run on liquidity, then we can see the market tanked lower, which tapped into the our first trade TP. And if we were to enter a second trade, then this was to be also a good opportunity to enter trade, with the stop loss being above the high, an aggressive stop loss being above this candle's high, the fair value gap's candle's high, right? The second candle of the fair value gap. So that was to be our second trade, and of course later on we could have seen a 1 to 2 TP hit. So this was the price action for Monday, but I want to go back onto the Euro USD because I did make a mistake, and the mistake I have already talked about it here. I was kind of impulsive. I got chopped inside this price action here because I wasn't really keen observing the liquidity sweeps and the liquidity runs, right? Because I'd seen these lows being taken with this formation of this fair value gap. So I was impulsive on the from the Euro USD because I was trading the Euro USD. I didn't enter on this fair value gap. So I saw this rejection lower, which I thought from the lower time frame that we have fair value gaps forming going lower. So inside here, I did enter at around these candles close, my stops being above these fair value gap high, which was an aggressive stop loss, but immediately the market rallied against me, took me out, and I was off the market. So I never caught this move. This is a hindsight move, which I did analyze and I guess to see what happened during the day. So the mistake I did make was I was impulsive. I was driven by my emotions, a fear of missing out. So I experienced FOMO. I didn't want to miss on this move out lower, but I was tapped out because I really didn't follow, and I was not keen on watching this price action, because a liquidity sweep would have told me, because we have not seen a fair value gap overlapping with these lows, then we should anticipate to see the opposing swing point, the immediate opposing swing point to be taken, then probably from there wait for another opportunity. So if I go back onto Euro USD, yeah, I have also my notes over here, but if you want to have the notes, you can go onto my Instagram, ranks mmxm, ranks underscore mmxm, or you can also go to my TikTok account, the same name, and you'll see these notes. So here is what I was talking about. I'd already seen the bullish market structure because we have these highs being taken by a candle, we have these fair value gaps being respected. So to me, I wanted to see bullish markets. So after seeing the bullish markets, see, at this point, this is where I did enter my trade, and yet we had a fair value gap here. So over here, after I'd seen this candle close, I experienced FOMO, and I thought the market could no longer return back into this fair value gap, which was really wrong. So I should have placed my buy limit inside this level and just left, but with this, it's a good lesson because no matter how a candle closes, no matter how bullish, but yet we have a fair value gap lower, then always I should place my trade inside the fair value gap, right? So I was impulsive with this trade, but later on the market rallied. I was taken out because of I guess some spreads, because over here you can see my stop loss wasn't hit or wasn't taken out, but from my MT5 I was taken out. But later on, you can see we had this consolidation, a rally higher consolidation. Then we can see these push higher. So that was my trade, and my takeaway lesson was always take a trade from a fair value gap. Always be keen on the candle closing, the 4-hour candle closing and candle openings, because from there we can also get some other confluences, and always stick to the trading plan, risking what I can manage. So those were the lessons of the day, but it was a good rate of price. So I confused myself, and it's something I'm working on, and I'm lucky to be working on this before I have my challenge account, so that whenever it comes, I'm ready. So thank you for watching this video. Remember to like and subscribe to the channel. And if you need my journal notes, you can go to my TikTok account, ranks underscore exam. Then you check on that, and please like the channel, and guys, we'll be seeing each other later. So until next time, guys, bye bye.